In the annals of financial history, few stories resonate with such a powerful blend of foresight, courage, and ultimate vindication as that of Michael Burry. While the titans of Wall Street basked in the glow of a booming housing market, confident in its perpetual rise, one man saw the cracks forming beneath the surface. He wasn't just an analyst, he was an outlier, a contrarian with an extraordinary gift for identifying systemic risk. His journey demonstrates the profound impact a single individual's conviction can have, even when pitted against the seemingly unshakable consensus of an entire industry. It reminds us that true insight often emerges from quiet observation, not from the loudest voices in the room. Burry's unique perspective was forged early in life. Born in 1971, he faced a rare eye cancer as a child, leading to the loss of one eye. This experience, rather than hindering him, sharpened his remaining senses and instilled in him an extraordinary capacity for observation and deep analysis. He learned to look beyond the obvious, to meticulously examine details others might overlook. This keen observational skill would become his superpower, allowing him to perceive hidden patterns and impending dangers in complex systems. It taught him that true understanding comes from seeing what others miss, a lesson that would define his future triumphs. Despite his exceptional analytical mind, Burry initially pursued a career in medicine. He earned a medical degree from Vanderbilt University and completed a residency in neurology at Stanford. Yet, even amidst the rigorous demands of medical training, his fascination with financial markets grew. He dedicated his off hours to studying investing, developing a unique approach focused on value. This self-driven pursuit of knowledge demonstrates the power of following one's deepest intellectual curiosities, even if it means charting an unconventional course. His journey shows that diverse experiences can often lead to a more profound understanding of any field, opening new pathways to success. By 2000, Burry's online writings about investing had garnered a significant following, a testament to his clear, incisive analysis. Realizing his true calling lay in finance, he made the audacious decision to quit medicine and founded his hedge fund, Scion Capital, in November 2000. While the broader market was faltering, Burry's disciplined approach to deep financial research and seeking undervalued assets allowed Scion Capital to thrive. This bold leap of faith, leaving a secure profession to pursue a passion, underscores the courage required to align one's actions with one's deepest convictions, proving that sometimes, the greatest risk is not taking one at all. Scion Capital's early performance was nothing short of spectacular, especially considering the challenging market conditions. In 2001, when the S&P 500 declined, Scion returned an astonishing 55%. The following year, 2002, saw a 16% return amidst further market contraction, and in 2003, it delivered an incredible 50% gain. These results weren't mere luck, they were the direct consequence of Burry's meticulous research and his unwavering commitment to value investing principles. His success demonstrated that disciplined, independent thinking could yield extraordinary results, even when prevailing trends pointed in a different direction. It was a powerful early validation of his unique investment philosophy. By 2005, Michael Burry's insatiable curiosity led him down a path few others dared to tread, the opaque world of subprime mortgages. While the housing market soared, fueled by seemingly endless demand, Burry began to meticulously sift through thousands of individual loan documents. He uncovered a disturbing pattern of predatory lending practices, adjustable-rate mortgages given to unqualified buyers, with low initial payments masking ballooning costs. This deep, granular research, far removed from the broad market sentiment, was the seed of his greatest insight. It illustrates the profound rewards of looking beyond the headlines and truly understanding the foundational elements of any system. What Burry discovered was terrifying. These high-risk, subprime loans were being systematically bundled into complex financial instruments known as mortgage-backed securities, MBS, and collateralized debt obligations, CDOs. Major investment banks were rating these highly speculative packages as AAA, the safest possible rating, based on flawed models and a collective delusion that housing prices would never fall. Burry realized this was a house of cards, built on a foundation of default-prone debt. His ability to connect these disparate pieces, from individual loans to global financial products, revealed an impending systemic collapse. This insight showcased his genius for identifying hidden, cascading risks. Convinced that a widespread default was inevitable, Burry needed a way to bet against the market. He found his instrument in credit default swaps, CDS. These were essentially insurance policies against bond defaults. While CDS were typically used for corporate bonds, Burry was one of the very first to approach investment banks with the unprecedented idea of purchasing CDS on specific tranches of subprime mortgage-backed securities. This was a radical concept, a bet against the very foundation of the booming housing market that the banks themselves were profiting from. His innovative thinking opened up an entirely new avenue for risk management, challenging conventional wisdom. Burry faced immense skepticism. Investment banks like Goldman Sachs, Deutsche Bank, UBS, and Merrill Lynch initially resisted, finding his proposal outlandish. They didn't believe the housing market could collapse, it was considered too stable. Yet, Burry's meticulous data and unwavering conviction eventually persuaded them to sell him CDS contracts. These banks, confident in their own analyses, saw easy money in Burry's foolish bet. This period highlights the profound challenge of challenging ingrained beliefs, and how a lone individual, armed with facts and courage, can eventually shift the immovable inertia of an entire industry. His persistence was a testament to his belief. Michael Burry didn't just dabble, he committed. He invested over $1 billion of Scion Capital's assets into these credit default swaps. This was not a small position but a massive, all-in wager on his conviction that the housing market was on the brink. This level of commitment speaks volumes about his certainty and his willingness to put his reputation, and his investors' money, on the line for what he believed was an inevitable truth. It was a moment of profound courage, a demonstration of what it means to truly believe in your analysis and stand by it, even when the stakes are astronomical and the world thinks you're wrong. As months passed and the housing market continued its upward trajectory, Burry's bet looked increasingly disastrous to his investors. They saw their money tied up in what appeared to be worthless insurance policies while everyone else was making a fortune. Demands for their money back grew vociferous, turning into outright threats. Burry, citing the terms of his investment agreements, restricted withdrawals to protect his strategy from being unwound prematurely. This period was an agonizing test of his resolve, facing scorn and potential ruin from those who trusted him. It highlights the brutal isolation of pioneering a contrarian view, and the immense mental fortitude required to persist. Beyond his investors, Burry faced scorn from the wider financial community. He was ridiculed, dismissed as an eccentric doomsayer. The prevailing sentiment was one of unbridled optimism, making his bearish predictions seem not just wrong, but almost un-American. This ostracization was a heavy burden, forcing him to stand alone against a tide of overwhelming consensus. Yet, he never wavered, trusting his data and his analysis above all else. His ability to ignore the noise and remain anchored in his own truth serves as a powerful reminder that sometimes, the path to groundbreaking success is walked in solitude, far from the approval of the crowd. The turning point arrived in late 2006 and early 2007. Defaults on subprime mortgages began to accelerate, initially unnoticed by most, but a stark confirmation for Burry. The first cracks in the seemingly invulnerable housing market started to show, then widen. Adjustable-rate mortgages reset to higher rates, pushing homeowners into delinquency. The value of the underlying collateral, the houses themselves, started to decline. This was the moment his long-held predictions began to manifest, bringing an eerie quiet to the storm before the full deluge. It was a testament to the fact that truth, no matter how unpopular, eventually reveals itself. By 2007, the housing market collapse was undeniable, transforming Burry's worthless credit default swaps into immensely valuable assets. The MBS and CDOs, once rated AAA, plummeted in value as widespread defaults became a reality. The very financial instruments Burry bet against became the catalysts for a global economic meltdown. As the market unraveled, the value of his CDS contracts soared, validating his every agonizing decision. This dramatic shift underscores the power of a deeply researched, contrarian insight, proving that fortune often favors those brave enough to see the world not as it's presented, but as it truly is, regardless of consensus. In 2008, as the financial world reeled, Michael Burry methodically liquidated Scion Capital's credit default swaps. The profits were staggering. His firm earned over $700 million, and Burry's personal gain was estimated at $100 million. This wasn't merely a financial triumph, it was a profound vindication of his independent thought, his tireless research, and his unwavering courage. He had stood alone against the might of Wall Street and emerged victorious, proving that the truth, however inconvenient, will always find its way. This moment cemented his place as one of the greatest investors in history, inspiring future generations to trust their own insights. Following this monumental success, Burry made another unexpected move. In 2008, he closed Scion Capital to focus on personal investments. He cited the immense emotional toll of the crisis, the pressure from investors, and a desire to avoid the permanent institutionalization that often accompanies such fame. His decision to step away, despite widespread acclaim, reflects a deep understanding of self and the true cost of relentless public scrutiny. It reveals that success is not merely measured in dollars, but in the preservation of one's peace and intellectual freedom. He chose introspection over endless expansion, a testament to his unique values. Michael Burry's extraordinary story was immortalized in Michael Lewis's 2010 book, The Big Short, and later brought to the big screen in the acclaimed 2015 film, with Leonardo DiCaprio portraying him. His experience became a symbol of identifying systemic risk, the power of conviction, and the necessity of independent thinking. He didn't just predict a crisis, he exposed the fundamental flaws and moral hazards within the financial system. His legacy isn't just about the money earned, it's about the courage to see uncomfortable truths and the unwavering belief in one's own analysis, even when the entire world tells you you're wrong. Michael Burry's journey offers timeless lessons for all of us. It underscores the vital importance of thorough research, challenging assumptions, and developing the courage to act on unconventional insights. His story is a powerful testament to the individual's capacity to perceive what others cannot, to stand firm against overwhelming opposition, and to ultimately shape their own destiny. It inspires us to cultivate our own curiosity, to question the status quo, and to trust our inner conviction. For in every individual lies the potential to uncover hidden truths and achieve extraordinary breakthroughs, transforming not just their own lives, but potentially the world around them.